There are years that ask questions and years that answer. That's a good one. Quote of the day. I haven't heard that one before. Let's get right to it. Bitcoin on the weekly chart. We'll do our Bitcoin update and then focus in on the daily and the 4 hour look to see what we're going to be watching for this week. And then, the weeks and days ahead. So if you like the video, give us a thumbs up. Follow us on Patreon and our Telegram for more content than what you see here on YouTube. And we'd be glad to help you out there. Let's see what we got. So the weekly candle just closed. After briefly making a higher high, we came back down and closed not, bearish, but I would say more of a consolidation is more likely because of said candle. Anytime you can make a brief higher high and then close below 50% of the candle, it starts to lead to the odds increasing of a consolidation. Now that could mean sideways, or it could mean kind of a retesting of one of these moving averages down here. So in the red, we have the 8-week EMA. In the yellow, we have the 21-week EMA. And in the darker purple right here, we have the 14 EMA. So those are higher moving averages. Likely after these initial big moves, you're going to have to test one or two or even all three of those at some point, right, on your initial test of the bulls. And that will be our kind of deciding factor if this is a real bull move and the bulls are here to stay, or we need some more time. That was too quick, and we need to go back down yonder. Yonder is the word of the day. So what we also want to be looking to the upside is resistance points, and that'll be our 200 week, which we've looked at multiple times. Also coincidentally is also the 50 week in the green there. So big one at the 200 and kind of a double whammy that we've, self-proclaimed double whammy at, right around 25K. Okay. So that's also would be, peaking outside of the top of the Bollinger Bands. We had a lower to upper move here. So after you do that, more than likely you need just some consolidation time. So no worries so far on the weekly. We're looking okay. If we come back down, we'd love to maintain a higher high, right? We took out this high. That closed at, right 20,900. So we don't want to give that away. So that would be kind of our, at least, light foot bullish step in the sand, right? We don't want to be going down here just yet. We give this away. Now, do I like the odds of us holding up here? Yes, because we closed, one candle right here, perfectly drawn circle, 2 candles right here, 3 candles right here. That's 3 weeks. Now we've held our head above water here. That's kind of our water line. And now we're working on number 4. Well, even if we come down here, we're still okay. 21K is kind of our, we need to start paying more attention if we go down much slower than that. Okay, so that's the weekly. Let's zoom into the daily, see if we can get any more information. Well, now you see the Bollinger Bands are constricting here, right? So that means less volatility so far. The bigger moves happen after you get these closed. You see how tight these got? This is like the narrowest the Bollinger Bands have been in years. And I believe it's even maybe all time, if you can fathom that. This was the tightest the daily Bollinger Bands got. I believe it was ever. I think that's accurate. So if not, then at least many years. So those kind of moves lead to these kind of moves, right? So we're constricting again. Obviously nowhere close to that, but usually after pinches come big expansions in one way or another. So that could take months. Okay, it could take weeks. Probably going to take at least weeks. It could happen any given time. So I'm not saying anything's coming really soon, but even this lasted a couple weeks without doing a whole lot, right? So and you could even draw that out to quite literally months. We're going back to November, really still staying at the same prices for over 2 months, right? 60 days, kind of relative sideways. So could we do that again? Of course, right? We just did it. So what we want to be looking at on the daily is, you guessed it, the 200-day, right? The big one, kind of right at 21.5. We could certainly wick below it, right, with a daily candle or, in a given week, of course. But, this is kind of the consolidation zone. We do not want to be giving back. We want to remain ultra bullish. Now, if you want lower prices, then you want to be thinking the opposite of all this stuff I'm saying. You want to be closing under the 200 day. You want to be closing under this range, right? That low close is 20,700. So that would, really, crack the ice. You see prices under 20,700, 20,500, that means that high was given away before the FTX crash. That means, this consolidation after this initial liftoff is now given back, right? This is be huge warning signs if we're back under this area. So just watch for that. But I'm not sure that that's the odds because of this is a explosive move. But the price tells everything, right? You don't need to, watch as many chats. You need to be watching more charts. So this is where we're looking at the moving average. Now, what is our giveaway here? Well, back in this candle right here, we talked about this could be a warning sign of things to come, at least for a consolidation move, because that was the first candle we had closed below the EMA 8 since our move above it, right? If you're wondering where closes are, right, you can always just view closing prices right there. And you can add that to your candles. If you don't know how to do that, it's just right there, right? You can just hit a star, and then you can, put whatever you want up here. So I have my traditional Japanese candlesticks, the closing prices, and my Heikin-Ashi candles, which tell you momentum. So we can get into that more. Hopefully most of you that have watched me before, that doesn't sound that unfamiliar. But that's what we're looking at so far. That was our warning shot. We closed below the EMA 8, and now we got another one right here just yesterday. Closed again below the EMA 8, holding our head above the EMA 14. So still okay, right? It's still, as long as we're above the EMA 21, right? You can remain more bullish, right? That holds true on any time frame, right? So 21 EMA, that's our focus. I would say for the rest of this week, 22,394, so 22,4. If we start getting below that, the odds are going to go way up for us going about another 1,000 down, right? So we're looking right now, we're at 22.8 as of recording. It's only 7%, right? Back down to this consolidation level. So no big deal. We're still okay, even down to here. But to remain the most bullish, we want to be holding the EMA 21. So having said that, why would I say that? Well, you just got to go look at history, and let's go back to 2021 when we were in an uptrend, and let's see if that was happening, right? So let's say these uptrends right here, right? Let's zoom it in. I know you probably can't see quite as good, right? So where do these moves happen? Well, look at this, right? You can't make this up. Look at the initial move, right? Big move up. Where does the consolidation happen? Look at the wicks right at the EMA 21. The move up. Where does it hold? Right at the EMA 8, EMA 8, EMA 14. Wick down to the 21. Hold up again. EMA 21, EMA 21. These are buy the dip moments at the EMA 21. If you haven't gotten any in yet, those are usually good ideas in an uptrend. We don't know if we're in set uptrend yet, but this is the initial move so far. We don't know if we're going to hold, but this is what we look for. If Bitcoin bounces off the EMA 21 and starts moving up again, this is when altcoins can come out to play a little bit harder than they have been. This is also when, Bitcoin might decide to, if Bitcoin goes on one of these tears, at the same time Bitcoin dominance is rising, then Bitcoin's usually your safest boat, at least for the time being, until it calms down a bit, right? If Bitcoin goes sideways above the EMA 21, then the altcoins really start to move. So these pullbacks, right? And you can start to get your warning signs when you close below the EMA 21. I mean, it's plain and simple, right? On any time frame. Look at your candle. When was the first time it closed below the EMA 21, and what happened after? Well, there's your candle below the EMA 21, and then afterwards, downtrend, right? Get back up, hold above the EMA 21, or, get right back above it quickly, right? This is even a little bit of a concern right there, right? That's showing a little bit of strength, like maybe fake strength, right? And then what do we get after that, right? that was about the end of it, right? So just hopefully that relates to somebody out there, helps someone out there somehow. So that's what we're watching for, plain and simple. EMA 21 so far, 24, 22.4, right? That's what we're looking for the rest of the, the days, and I would say the rest of this week. So let's go down to even a shorter time frame, the 4-hour, and you can use the same thing here, right? And what have we got? Well, look at the EMAs. They're now not only crossing up, but we've closed, multiple candles right below the EMA 21 and the 14. Now, as you zoom in to the 4-hour and the hour and all those, the shorter the time frame, the less important I wouldn't say important, the less, I concrete, the less certain you can be about these said moves. Now, if these happen on the weekly and daily, they're much more important levels to be breaking. But day traders, right? I would stick to the day and above for those kind of zones. But we're looking more or less for support and resistance levels, right? We're in this consolidation area. Use closing prices on the 4 hours. If we lose this low, right, that would be a concern. Until like 22.5 is given up, I think we're still okay. This is for the next couple of days or so, right? This is the 4 hour chart. So I would be watching this. We're pushing down towards this low right now. Now, what happens if we come outside of this? Well, you're going to your next zone. Where's your next zone? Right over here, right? You should be looking at your sideways movements. There's your next consolidation zone. And that goes from like 21.3 to 20,600 or so. Also, you have your 200 EMA, right? Be watching that guy. Those are kind of levels to be watching over the next several days. So now you're a little bit more well prepared than maybe you were before you started the video. So hopefully that helps you out there. If you want to see more stuff like this and more, hourly, 4 hour, let me know. If you'd rather me just stay to the weekly and focus on big picture, I can do that as well. What other videos do you want to see? Leave me a comment below. You want the DXY? You want the SP500? Matic? Other altcoins? Name it. You name it. I do it. Whatever I get the most of, I'll do, sometime this week. So I appreciate you watching this long. If you have, let's do our car of the day. Maybe a surprise to some of you. The Porsche Cayenne GTS. I think it's one of the better looking SUVs out there. I love that Porsche started doing this like singular taillight. Pretty cool. They do it on the 911s as well. There's your front. I think these are two different years though. I'm not sure that this rear end looks like this one, but I love that backside. The car. Get your head out of the gutter. All right, I'll see you on the next one. We'll do whatever you guys request. Appreciate you watching.